Good morning, everyone, to the Main Street Planning Group meeting. And today we're going to talk about disability insurance. Main Street Planning Group has many disability carriers, and I would say Principal is probably our best partner for many of the things we sell. And what's important is that people don't realize that their biggest asset is not their home, it's not their car, it's their ability to make an income. And that's the truth about disability. And what I like to tell people is, if you had a money machine in your basement and that thing just cranked out dollars, would you put oil in it? Yeah. Would you service it? Yeah. Well, you're your money machine for your house. So if you're not oiling it and you're not preserving it, you're not going to the doctor, as John was just saying, or James was saying, and you're not taking care of it, the loss of that machine generating that income can cost you your whole future and present. So with no further ado, I do want to introduce John Emanuel, who's been one of the premier disability experts for many years with many different disability carriers. And John, I'll let you proceed with your
Yeah,
presentation.
sure. Let me just share my screen real quick. Glad everyone has taken some time today to sometimes computer illiterate, but we'll get this going in a second. I'll share that. Can everybody see that?
Yeah, it's all good.
Okay, perfect. So, well, good morning, everybody. And welcome. Neil, thanks for inviting me today to spend a little time with everybody to talk a little more about the importance of income protection, how to grow your business, and really, I think, help clients prepare for the unexpected. Again, I'm John Emanuel. I'm the DIR VP for Principal. I've been with Principal for a little over 16 years, been wholesaling income protection since 1990, so a little over 31 years. So I like to say this, to say I've seen a few things in terms of product changes in the marketplace, carriers exiting the business is an understatement. I think when I started back in 90, there were probably, a couple of hundred different disability carriers. Port Revere, Provident, Unum, they were all surplus carriers. Every major life company had a disability carrier. And then the unfortunate 90s came in and claims and all those things happened and companies exited the business with only a few surviving. And I think now if you look at the marketplace, there's probably 10 main streamline carriers that are really doing brokerage and stuff like that. But I think the one thing that really hasn't changed is the need for income protection for U.S. workers. I know this is still a very difficult time for you and your families and the way we're living and trying to do business. I try to tell my daughters, only certain things we can control, and that's our attitude and mindset. We all try to keep a positive attitude, and I like to say focus on the objectives that we all had prior to this pandemic. Over a year ago, we should be okay. And what I like to say is, what were our objectives over a year ago? To me, they were really to help people live their best lives, which includes helping them plan for the future, with all the risk protection investment service products that you could recommend. But I think one of the products I think we overlook a lot of the times or we forget to discuss is income protection or disability insurance. I try to use that word income protection with individuals because I think it has such a powerful phrase versus that word disability, which I think people think has such a negative connotation, and ask yourself, what would happen to your clients or prospects if their income stopped for a period of time, say 3 months, 12 months, maybe 2 years, all the way out to age 65? What's their plan? That's really what I want to talk about today is how can we help you start that income conversation and really instill the confidence and competence to have that conversation with your clients each and every day. So let's get started. Talking with so many other of my colleagues in the industry, I think we're like in a perfect storm when it comes to income protection. And the reason why I say that is for a couple of reasons. I think we're in a perfect storm in terms of unlimited prospects. Only about 50 million individuals in the marketplace out of the 125 or 150 million working Americans have what we call adequate income protection, whether that's group LTD or individual disability or a combination of the two. And to me, there's limited competition. Earlier, I said there were multiple carriers, life carriers selling income protection. In today's marketplace, there are less individuals in the industry and even less talking about individual income protection. So why is it important for you to start talking about it? Well, one, it's a great door opener. Few have it and few have been approached about it. Most clients are not going to ask you about income protection. You truly need to bring it up to them. If not, you're truly leaving a sale on the table. You know, people think, you know, if you don't make a disability sale on that first call, just let it go. But I think you need to go back to clients a second, a third time to have that conversation, to continually reinforce the importance of income protection. Finally, let them say no to you and then move on. Also, explain the importance of a disability coverage. Explain what it does to help clients pay for their everyday living expenses, including premiums for other products they might have with you. Third, it's going to help diversify your portfolios from just maybe life insurance or investment offering. Not only will it do that, it's going to provide generous first-year compensation, strong renewals, as well as bonus opportunities from a variety of carriers, not only with Principal, but with other carriers that Neil might be working with. Fourth, it's part of your due diligence. You know, again, what would you say to your clients and their families if one of your customers became disabled and you hadn't helped them with income protection? Are you prepared to admit to them that there's a financial gap in their strategy that you helped develop? And then finally, solutions are available in sought after markets. That small business owner with their employees, high income individuals. But to me, you need to have the conversation with all individuals. So to me, what does it take to be successful? I love it when I do this.
Hey, John, can you make your screen a little larger?
Sure.
Yeah, make it full screen.
You know, I have like a double thing here.
Hit the thing next to the X, maybe.
Yeah, I know, but I'm on like a mouse. Just give me one sec. And my mouse sometimes gets. Are you seeing like all the slides? Is that what's happening?
Yes.
Okay. Give me one sec. Is that better?
Yeah, but I think if you hit slideshow, there you go.
Yep. Is that good?
Yeah, it's better.
Okay. You know, again, what does it really take to be successful? You know, own it on yourself. And the reason why I say that is if you don't own it on yourself, obviously it's hard to, you know, propose this to other individuals. Go through that process, go through the quoting, the application, the underwriting, delivery, the compensation. Again, most importantly, talk to all clients about protecting their income, not just the ones who ask about it. I see so many times I get production lists on, you know, producers that do business with Principal. You know, I call them the one-hit wonders. Producers are doing one app a year, maybe two. You know, we've done research, spent millions of dollars in the marketplace on why consumers don't buy disability insurance. And honestly, the number one reason why people don't buy it is no one has brought it up to them. You need to ask if they're concerned about losing their income. Don't pick and choose, you know, who you discuss income protection with. Ask every client. Finally, or thirdly, I see all the time clients will call in and they'll say, you know, I have a client who earns $100,000 and show me the maximum $5,000 a month. From there, they'll quickly show the client that $5,000 a month with all the riders, but honestly, they haven't established the need. Help the client understand what the income will provide them and their family. Show them how their income is their greatest asset. Ask them what their mortgage is, their car payments, food, utilities, it's on the floor, and how much they're saving for retirement on savings on a monthly basis. Honestly, you need to learn to sell without an illustration. And how do you do that? You do that by asking a million questions and then wait for the answer. It's important to have that conversation. To me, we're not really just selling a product, but rather a solution to a gap in their planning that might arise if they are sick or hurt and too hurt to work. So what are many of the different products and solutions that you bring to clients? Or you may have found a niche and prefer to sell a specific product or solution. You may help enjoy clients, plan for retirement with 401k, mutual funds, life insurance, or maybe possibly group benefits. Whether you're a seasoned professional or a sole little or no disability, you really should consider making DI a foundation for your client's financial strategy. And we've all seen this pyramid if you've been in the business as long as I have. Again, it shows how income protection and income is the base of everything else we do. Truly without income, your clients might not be able to afford other items that you've helped establish, such as paying for other insurance premiums, retirement, or having the funds to pass along to their loved ones. Take a moment to ask yourself, have you done everything you could to help them protect their financial foundation? Start talking about it. Again, not only with those highly compensated white-collar individuals, such as attorneys, architects, engineers, medical professionals, but small business owners and their employees. And I'll get into that in a minute. Again, if you haven't discussed that threat of disability with your clients, you're missing out on that crucial opportunity to help them protect what I think is their most crucial asset, their ability to earn an income. We've all seen it during this pandemic over the last 12 months. If you had told me 12 months ago, a little over 12 months, I'd be working from home, my wife and kids, one home from college, I would have said you're crazy. But truly, that's how fast things in our lives can change. 1 minute we're doing everything is fine, and the next, including your income, could stop. We need to help and take away that worry from people with income protection. Again, if you haven't reached out to your clients with DI, are you prepared to? We're only about a month out from, Disability Awareness Month in May. So now it truly is a great time to start thinking about people. I truly believe if you sell any of those other products, from life to mutual funds to 401k benefits, it's easy to cross-sell with individual disability. We also need to help people understand the value of their income and what it actually provides them and their family, like their home, their car, cell phone, or other insurance products that you might have offered them. Yet people are protecting their homes with homeowner insurance, car with car insurance, which I know is mandatory, but what asset has a greater value? Is it their home, their car, or their income? Ask the question, what is the value of their home? What are you paying for homeowner insurance? What's the value of their car? And what are you paying for that car insurance? We all hope in time our home value will increase, but we know as soon as we drive off the lot, the value of our car will decrease. Yet we pay more than 3, maybe 4, 5% of the value of auto insurance to protect that car. But people aren't willing to spend 1 to 2, maybe 3% to protect 60% of their income in the event of a disability. Think about it. If somebody is 40 years old and earns, $100,000 and has a 5% increase to age 65, their earning potential is roughly $4.7 million. Ask the question, you protect your home, you protect your car, what about the earning loss of $4.7 million? How are we going to protect that? People always have answers to everything we do in life. Now they might turn to you and say, well, I can take from savings, retirement, emergency funds, all options. But if you save 10% of your income for 10 years, it's wiped out in 1 year of a disability. A lot of people might say I can turn to my spouse, but I look to that customer and I say, why are both of you working? And the reason is where we live, cost of living, or just the quality of life that individuals enjoy. They need both incomes. The third, Social Security disability. Not sure that's the best option for most individuals. Do we really want to rely on the government for disability benefits? It's extremely hard to collect. 65% of individuals who apply for Social Security disability benefits are actually declined the first go-round. And the definition of Social Security disability is 12 months of total disability with the unfortunate or likelihood of passing within 12 months to 2 years. Not the best option. People can say they might use their loans, credit cards, but think about it. what bank is going to lend a disabled person money? They're going to ask you, what's your job, what's your W-2, what's your income stream? Credit cards, again, what's the plan to pay back those credit cards? We've all seen on Facebook, whether it's Instagram or LinkedIn, GoFundMe pages where people have requested donations because they have not planned properly for unexpected bills that arise because of something has happened to them. Don't make that happen. Don't let that happen to your clients. What are target markets? Everyone always asks, who's a good target market for income protection? To me, it's anyone ages 30 to 55, but we do issue coverage to anyone ages 18 to 60. And we do issue coverage up to age 64 on MultiLife, which is age 64. Professional markets, white collar is the industry's standard, if you want to call it that. Attorneys, architects, CPAs, IT professionals, small business owners, and their employees. This flyer, the JJ2310, I'm going to send it out to Neil and he can get it out to all of you. It's a way maybe you can jot down some names that maybe we could prospect to of people that you're thinking of who might need income protection. It's just a list that maybe you've recently sold life insurance or an investment to or done some financial planning with that we can quickly go back to and say, hey, these could be some IDI opportunities. Also on here is a free online source, Principal.com IDI Target Markets. On here, you're going to see marketing material available through Principal for various target markets, from CPAs, engineers, directed towards these markets. And it's actually going to give you, in your local market, wherever you might be, specific organizations that might be a great opportunity for you to market income protection to. The next slide, we're talking about, comprehensive offerings. Having been in the business for over 30 years, I think Principal does have one of the most comprehensive offerings. If we look at all the different needs on this slide, from income protection, retirement savings, business protection, exit planning, Principal does cover all of them. The first is obviously income protection or disability income for personal needs. The IDI, again, we know it's going to protect in the event of a disability if you're sick or hurt and can't work. Principal now can issue up to $35,000 a month of individual disability in our white-collar professional 5A, 4A, and 6A occupation classes. And in the medical market, we can actually issue up to $30,000 on an individual disability contract. With Group LTD, we can issue up to $35,000 in those two markets. So $35,000 of all individual or $35,000 with group. In the medical market, $30,000 and $35,000 with Group LTD. Variety of elimination periods, 30, 60, 90, 180. And we can also go out to benefit periods of 2 years, 5 years, 65, 67, and age 70. Variety of riders, standard in the industry, residual, catastrophic, cost of living, own occupation, we call it regular occupation. And of course, our contract is what we call non-cancelable and guarantee renewable. Once it's in force, it's never going to increase all the way out to age 65. Remember, the average cost for income protection for an individual is about 1 to maybe 3%. And those premiums are going to be based off of the age of the insured, the occupation, and the provisions. Remember, on an individual disability basis, within the industry, the rates are sex distinct. How do we make it more palatable for individuals? That's that MultiLife DI or employer offering. With 3 or more lives within a given organization, we are able to offer a 20% discount and unisex pricing. This allows an individual to have our discounted rates at 20%. Females within this group can save 40 to 45% off their sex distinct pricing. To me, it's the easiest way to market income protection. When I was with Paul Revere, we used to have a sign in our office that said it takes just as much energy, knowledge, and experience to sell 1 life as it does to sell 3. Again, if you're working within a small group and you can show this discounting to 1 individual, and the way we do our illustrations is, here's your standalone rate but also here's your multi-life opportunity cost. If you show that someone that 20% discount, whether it's a male or a female, I guarantee you they're going to help you get those other 2 lives. Our principal does give you 12 months to add those other 2 lives. So if someone applies today, no discount. Someone applies in 3 months, no discount. But once we get that 3rd life, maybe in 6 months from now, we retroactively go back to those first 2 lives and give them their discount from day 1. The next offering is our retirement savings. Again, this product allows an insured to continue to save for retirement should they become disabled. Think about it. If someone is working, they're putting money aside, but then they become disabled, the money that they've set aside will continue to grow. But once they're disabled, no new money can be deposited, leaving them sort of a shortfall due to that disability. Our DA retirement securities can make up those lost contributions should an individual become disabled. The way we calculate our benefit is sort of different than our competitors. It's a flat 15% of the insured's earned income. An example is you're making $100,000, we can offer $1,250 a month. $200,000, it's a flat $2,500 per month. Please note, it's a standalone disability contract, and it's above all individual and group insurance. One other important item to know is we do not require the insured to submit their actual contributions to any kind of a retirement plan. We're not even concerned if they're actually making those contributions to a retirement account. In addition, underwriting is fairly easy for this product. There's no labs, there's no financials. All we require is the application, the trust documents, and our online Part B or tele-app information. Next, we have our business protection offerings. First is overhead expense contract. Again, allows small business owners to continue to meet their business, expense obligations should they become disabled. Items like rent, employee salaries, phone. We can issue up to $50,000, 30, 60, 90-day waits. Benefit periods, 12 months all the way out to 30 months.
And one of the things I want to talk about is business overhead expense, which is very important. I know a lot of friends of mine and whatnot own stores and whatnot. Maybe they're in cash businesses. They don't show a lot of income, but they certainly have a lot of expenses. Okay. And with those expenses, they can get a really good business overhead policy to cover those expenses to keep them in business. So even if they're salaried, they're not showing a salary, whether they're hiding income or they're doing, they're just not showing a big salary. This is a big tool to help them keep their business afloat.
Yep.
If they need it. I just wanted to add that.
Yeah. No, it's a great follow-up. And I mean, if we look at the industry, probably 97% of all premium that's sold is coming from individual disability. And maybe 2% industry-wide is coming from overhead expense and loan protection riders. And about 1% of all premium is coming from disability buyout. Now, if you think about how many small business owners are on just here on Long Island, that just tells you how underserved those markets are for the business protection product offering. So again, the opportunity is there. You just need to start talking about it and get those opportunities for us to evaluate them, to uncover the need for those individuals, to bring those protection needs from overhead to disability buyout. Because again, if you're in that market with those small business owners and you're talking about doing a buy-sell agreement, and you're talking or you're funding it with life insurance and you're not funding it with disability, obviously you're leaving a huge gap in their financial plan. Because disability buyout is probably so undersold. If you think about it, most people are concerned more with life insurance than they are with disability. And most people within their buyout agreement, there's always a fund that says we will fund, we intend to fund, but they never fund it properly with disability buyout. So disability buyout is a great way to set, that fair market value should a business owner become disabled during their working career. We can actually go up to $3 million within the disability buyout marketplace, a variety of elimination periods, 365 up to 2 years, benefit periods, 2, 3, 5 years, lump sum, or a combination of lump sum and periodic payments. So, this offering, don't only think about disability as individual income protection. There's so many offerings. Sometimes if you're going into a small business, maybe it is a disability buyout, but it can turn into, a disability multi-life sale where if you have two business owners, we could put on a third life to make it multi-life. And we put on a small individual disability contract to get that 20% for the disability buyout and the individual disability contract for that third life. Owners pay for that premium for that third individual policy, and now we give them a discount. So there's a lot of opportunity to go into any opportunity with business overhead, disability buyout, even DI retirement securities. DI retirement securities is also undersold, especially for individuals who are maxed out in today's marketplace. I know carriers are increasing their limits, increasing their issue and participation limit, but there are medical professionals, attorneys, architects who want more coverage. The DI retirement securities is a great way to go back to individuals and say, here's another way to make sure your retirement planning is funded in the event you become disabled. So there's a lot of opportunity. Here's something I always like to show individuals. Individuals are always going to be concerned about the cost, whether it's disability, life insurance, or whatever it might be. I try to show them how they're spending money on other items such as internet, smartphone, cable, Netflix, and, who could have lived without Netflix during the pandemic? Here, an individual, I think he's 40 years old, spending around $266, $250 a month for those 4 or 5 services. Income protection for a 40-year-old man is going to cost about $108 a month. If we take that individual making $75,000 and we run that out to age 65 with a 5% increase, that individual over that 25-year period is going to earn about $3.5 million. So ask that customer, we're spending money on internet, phone, premium cable, Netflix, but yet you don't want to spend $108 to protect, or the opportunity to protect, $3.5 million. Most people don't understand what they have to lose without protecting their income because they're not understanding what their income allows them to do. Think about smartphones, your cell phone. I have a family of 4 on my, Verizon account. Now, thankfully, the phones are a little bit older. My cell phone bill used to be over $300 and something. 10 years ago, I didn't have that expense. Neither did any of us or you. Somehow we all worked it into our budget. People find money for what they think is important. We need to help them understand we need to find income find money to protect our income in the event we're disabled. I look at this and I say, total risk. Many of you, you're helping individual clients, in the event of a premature death. A good rule of thumb is you're helping people with life insurance. You probably also should be helping them with a living benefit, which is disability. Again, we know life insurance is purchased to help protect the beneficiary after death to maintain their current standard of living. With clients, they need to consider the likelihood of a disability occurring during more before a premature death. Is much greater and can have even greater significant impact on their financial foundation. Even 1 year of a disability can impact someone's savings long term. Working together, Life and DI can help protect your client's foundation and well-being. Again, remember, when writing life and disability, there's different underwriting, mortality and morbidity. Again, mortality is the relative frequency of death in a specific population. There's really no gray area, either you're dead or alive. Again, morbidity is the proportionate, sickness of a specific disease in a geographic location. a lot of interpretation from underwriting perspective on that long-term disability, determining, how long that disability might last. The occupation comes into play, white collar, blue collar, how much benefit are they eligible for, based on their income, et cetera. It's life insurance and disability. For life insurance, for disability, I say it's a far less exact science. Think about this. An old colleague of mine used to say, you don't die and then get sick. You get sick and then you die. And that does hold true, because individuals need to consider a living benefit when they're planning. There's plenty of opportunity when you're looking to do underwriting, simplified, streamlined approach. I know a lot of companies are doing this. We do have a simplified program on both life and disability, where with Principal, you can buy up to $6,000 a month, no blood, no urine, no financials. It's a quick phone call or a quick online Part B. And we usually have about a 48-hour turnaround time to review the disability portion to approve that individual. Now, we do have the right to rate rider or decline, but it's a great way, if someone has group LTD in force, to go back to them and say, hey, we have a streamlined approach for you to be eligible to purchase up to $6,000 a month without the normal underwriting requirements. And now most carriers, including Principal, are up to $10,000 a month without normal requirements. Cost is always going to be a factor when looking at income protection. And as we know within the industry, it's sex distinct rates. Male rates are going to be substantially cheaper than female rates. Here is just, a sample 30-year-old, 40 and 50-year-olds. Female rates are going to be anywhere from, sometimes 25 to 30% higher than their male counterparts. People always say that's unfair, but it's also just the opposite for life insurance. And people say, why are females more? Statistically, women just go on claim at a younger age than men, and they tend to stay on claim longer than their male counterparts. But the easiest way to combat these types of cost is to do it with that MultiLife unisex pricing. So what do we need to run an illustration? It's fairly simple. Gender, male, female, date of birth or age, occupation, income, tobacco use, smoker, non-smoker, and then the other coverage that the insured might have in force, whether that's association, group coverage. And again, on that group coverage, who's paying the premium for that coverage? And here is just a sample illustration that, we would run for an individual. We can get into all the specifics when we're running it. Here's an individual earning $100,000. It's for $5,000, which is about 60% of the insured's income. We're going to review the various features that enhance the policy. The first are, I think it's the benefit update and the future benefit increases, both free riders that allow you to get more coverage in the future without medical insurability. Then we go into just some of the free features of rider, like the capital sum and the presumptive riders. And then we're going to go into the benefits that actually enhance the definition of disability, like our residual, and we call regular is our own occupation. And then we're going to show the cost of the proposal and the percent of the insured's income. Like any carrier, we're going to look to underwrite the individual. Once they're ready to apply, we look at three factors: their financial insurability, their medical insurability, and their occupation. And we want to properly build this to the underwriter to best explain who this customer is. From an income verification, again, over $6,000 a month, we will require a W-2, a 1040. From a medical exam, a paramedical exam, amounts over $10,000 will require, blood, urine, a physical exam. We no longer require EKGs. And honestly, I do believe in time, more and more carriers are going to be increasing these medical limits. I think carriers are going to be doing more and more studies We're doing human APIs now, which is the ability to get into people's medical records through their portals, through, Northwell, through NYU. So I believe in time, we're probably going to eventually do away with exams and medicals, because we're going to be able to just tap into people's portals and get the medical information right then and there. Basically that's it for my formal comments. I just wanted to give you a few highlights of Principal in last year. We sold over 60 million in 2020 during the pandemic. It was a record year. We ranked number 3 in terms of overall premium. We now have a little over 550 million in overall premium. We have over 220 million insureds. Last year, believe it or not, we paid out over 140 million in new disability claims to roughly 2,800 insureds or disabled individuals. I wish we were able to do these types of meetings in person where I can better understand your markets. And I hope once we all hopefully get vaccinated and we feel comfortable, we can certainly go and start to get together and sort of live life like we were, last, February or January, because I don't think any of us thought we would be doing meetings like this a year after this pandemic started. So, again, I think most importantly, think about customers, start having that conversation. Don't discriminate who you're having that conversation with, and let's help people plan for the future. Again, making sure those plans are adequate and making sure we're helping them live their best lives when things don't go as planned. So I'll open it up if there are any questions, or I'll turn it back over to Neil if he wants to give any last final comments.
One real comment that you mentioned, and if you network or you're talking to accountants and attorneys or any small business, large business, the conversation of does the business have a will or a buy-sell agreement always come up. And the accountant and the attorney, if they're doing their job, have to bring up what happens if. It's the law, it's their fiduciary responsibility to bring up what happens if one of the partners dies, what happens if one of them gets disabled. But I can tell you 95% of these buy-sell agreements that are written, whether they've been written or are about to be written, they talk about disability, and 95% of them don't fund it. 95%. So what does that say to me? What a huge opportunity it is to have that discussion. And actually, there was another person that was supposed to be on this call today we had this discussion yesterday, because he was in the midst, he had a small business he was doing health insurance for many years. And he had asked me to run a whole bunch of life quotes for him. He was asking for $1 million and $2 million. And he wanted to know the difference between cross equity purchase. I said, you don't need to know any of that. The lawyers were on the phone. They asked the clients, I wish he was on the phone because he could say, he said, I told him, ask the attorneys this question. What do you feel the business is worth? The attorney said $60 million. He's running quotes for $1 million and $2 million of term insurance. And the attorneys are now telling him the business is worth $60 million. Okay. Is there any plans for anyone to be disabled? No. Do they have any life insurance? No. But you know what? They were concerned if one of them became disabled. They had a money machine going. And if one of them became disabled, what's going to happen? They can still get paid? Very important. Now, it's 2 questions came up. One from Scott Lewis. Can a chamber or a networking group be considered a group with Principal?
We do have association opportunities, but chambers are not eligible. It's got to be a specific type of industry to make an association opportunity available to them. So, let's say you had the Nassau County Bar Association. That would be an association we would be able to make a 10% discount or 20% discount available to. chambers, we are not able, because their occupations are all over the place. It's got to be a specific industry or occupation.
So, John, let me just expand on that. I do a lot of individual insurance through some unions, and each one of these members that joins these health plans has to become part of an association that's set up for them. They pay monthly dues that are included in their premiums. Can I market to these groups as an association to get 3 or more lives or anything like that?
Yeah, so yeah, I mean, within each organization, you can certainly market to, but I don't think you can do it based off of a chamber discount. You know what I'm saying?
Chamber. This has nothing to do with chamber. This is a union, basically. This is a union.
Yeah, that would not be something that we would afford you the opportunity to give a discount because they're part of a union.
Well, they really just joined the association for their employment category to be able to join the union health plans, but they're not union per se.
Is the union or the association sponsoring other type programs like this?
You mean
Health insurance.
disability, you mean?
Yeah.
Only group stuff, not individual.
Right. I mean, that's something we could certainly talk about, maybe offline, if I can get more information.
It just,
Yeah.
you know, it came into my thought process while you were talking.
Okay. We can certainly talk about that offline.
Okay.
And John, another question came up. How is principal handling COVID? If they were diagnosed with COVID, is there a waiting period before they can apply for disability?
Yeah. Yeah, I think I was telling you this a little earlier, Neil. I think we've had during the whole pandemic, actually 2 individuals go out on claim for COVID-related types of disabilities. I don't think even the industry is seeing that many COVID-related disability claims. I think the industry is seeing more life-related COVID claims. But no, it would be the normal waiting period for COVID. There's not anything different for COVID than it would be for any other type of accident or illness. If you have a 90-day wait, can't do your job, it would satisfy after that for COVID as well. There's no different.
I think the question was if they were diagnosed in the past.
Yeah, I mean, again,
currently.
Yeah, if you're diagnosed, did it stop you from working? And if it did it stop your income from working, you know, reduce your income? So again, it's the whole claim process.
No, we're not asking about claim. We're asking about a new application.
Oh.
Somebody had COVID.
I'm sorry. I'm
2
sorry.
months ago.
I'm sorry.
How does that affect underwriting?
No, it has not stopped us from underwriting people if they were diagnosed with COVID, if that's your question. Sorry, I was misunderstanding.
That's okay. Now, finally, the difference between a 10 or 20% discount for an association or something you were saying.
Yeah, so the basic association is 10%, and you have the availability to give another 10% mental nervous limitation. So outside of New York and California, you have the option to have full mental nervous for the full benefit period, whether that's 65, 67, or 70. In New York, we now limit mental nervous for all applicants to 24 months. So if we have an association in New York, those individuals would now be getting 10% association and the 10% mental nervous because we now require that in the state of New York. So they, in theory, would be getting a 20, where outside, they could have the option to have 10 or 20.
Excellent. Does anyone else have any questions at all? Danielle? We can't hear you. I don't know why. You're not on mute. Just can't hear you. Maybe your speaker's not on.
Can you hear me?
A little better. Just a little quiet. Very quiet.
John, does Principal still offer any unisex rates at all for associations or any MultiLife groups?
Yeah, so for association, that's always sex distinct. But if you have 3 lives in, ABC organization, those would be unisex. We still have unisex pricing for any organization. We recently got out of the unisex pricing for all medical professionals. So doctors, dentists no longer can have unisex pricing. They will have the ability to have sex distinct pricing with a discount. So, but if you have a small architectural firm, business owner, they are eligible for unisex pricing.
But not the association. Got it.
Correct, not an association. So if you have an association of engineers, they're going to get sex distinct pricing. But if you go into ABC organization within that association and we can get 3 lives, we can now give those 3 individuals the unisex pricing, if that makes sense.
Yep.
So the
Thank
entree would be that 10% or 20% discount. But once you're in there, you could then flip it to unisex if we know we're going to get 3 lives. So it's really more of a marketing tool if you do get an association that is interested in endorsing you in principle to have disability for their members. But as you get the roster of the organizations, the best way to market is with the MultiLife pricing, which would be unisex. Females will save 40 to 45% off their sex distinct pricing.
So when you do a multi-life case, as long as you're the agent that the company has endorsed, no other agent, you come in there and write that discount for that group. Is that correct? Did I hear that right?
Yeah, I mean, we're not going to publicize if you're writing, ABC organization and you're the only producer that knows about it. We're not going to tell anybody that, John Doe wrote this organization, that you can go and write everybody in there if you want. If you're talking about what's happening within the medical market, I think.
John, that wasn't really my question. So let's say I have a group of 5 people. We wrote 3 of them. We got them the discount. Okay. Now they hire somebody new. They've got an insurance agent that they want to give the disability business to. Can that person's agent write that policy for that client with the discount just because the group has a discount if I'm the agent for that group?
Yes, yes, that person, if they want to use that agent, they could also, if you want to do it, write that piece of business with the discount. But
so the agent's not protected in that.
Correct. But we will say to that new agent, we want you to get 3 lives as well. It's kind of.
They're not going to be required to.
They're not going to be required, but we're going to sort of say you need to have your own 3 lives within this organization as well.
But they're not, okay, but again, they're not going to be required to, okay.
They're not going to be required to. It doesn't happen all that often, but I hear what you're saying. You're worried if you set up a discount, could any, Tom, Dick, or Harry come in and just write it?
Yeah, I don't want him coming in and writing business at my group just because he's got a relationship with somebody. I want to know that I got all that business. The guy wants it, he's got to come to me.
Right. Well, yeah. I mean, we're not gonna police it. But if somebody says, if they call into principal and say, do you have a discount at ABC organization? We're not going to say, yeah, go and write somebody. But if they now have built the relationship and they're doing other benefits for that organization, it's kind of hard to say, don't write that person with the discount when we know there's already an established discount there.
Okay. Yeah, it's a big question.
Okay.
Thank you.
And if you want to follow up, Scott, offline, we'll set that up.
Yeah.
And we are going to cut it pretty short because we've used up our time. You will get a follow-up recording of this conversation. Any situation anybody walks into, please run it by me, whether it's a medical situation or anything else. Please, every client where they have group benefits, individual benefits, group benefits are not portable. If they say, I got disability at work, it's not portable, look at the benefit, make sure your clients are covered. It's your professional duty and obligation to help your client. and it's the right thing to do. And I don't want to just think clients. I think everybody you walk into, you got to think, are they covered or are they not? You got to, when you do your fact finds, you have to really explore, because this is the most vulnerable thing in anybody's portfolio is their income and their most valuable asset. So thank you for your time, and listen, have a great spring. Business is popping and we're excited about it. So thanks again, everybody.
Stay safe. Thank you.
Take care.
Thank you.
Take care.
Thank you.